Hi everybody, this is Lara at Elliott Wave Stock Market with your end of the week video analysis for the S&P 500 for the trading week ending Friday the 17th of August. I expect it's most likely we'll see another little pullback to complete a triangle early next week, and then overall next week I expect upward movement. We may see new all-time highs next week or the week after. There are new all-time highs this week from the AD line at both the daily and weekly chart levels, and the bigger picture remains extremely bullish. The mid-term target is remaining at 2922. That's the Elliott wave target, but if that's wrong, it may not be high enough. A classic analysis target is at 3045, and the final target remains at 3616, which may be met in October next year. At the weekly chart level, this wave count sees the cycle degree fifth wave beginning here. This is a fifth wave at cycle degree within a super cycle degree fifth wave, which may possibly be within a grand super cycle degree first wave. And so when the structure is complete, the wave count expects a huge trend change at grand super cycle degree. That's a once in multi-generations event. So this is a very, very big trend change this count expects coming up about 3616. Cycle wave 5 has to subdivide as a 5-wave impulse, and the structure is incomplete, so I don't expect a bear market to begin yet. Cycle 5 so far has primary 1, 2 and primary 3 is incomplete. Primary 3 is subdividing as an impulse. It may only subdivide as an impulse. So far we have intermediate 1, 2, 3, 4 and intermediate 5 underway. Intermediate 5 is extremely likely to make at least a slight new high above the end of intermediate 3, so a new all-time high, to avoid a truncation. When primary wave 3 is complete, when intermediate wave 5 within it is a complete structure, then this wave count will expect another big multi-month consolidation for primary 4, analogous to primary wave 2. Primary 4 will probably look something, if it's a triangle anyway, it'll probably be something like this, but it could also be a flat or a combination. And if it's deep, it should find really strong support at the lower edge of this teal trend line. When primary 3 is complete, then the invalidation point will have to move all the way down here to the end of primary wave 1, but primary wave 4 would be expected to end within the fourth wave of one lesser degree price territory, so from this high to this low would be fairly likely, although it doesn't have to be that deep. And primary wave 4, if it's deep, would be expected to find extremely strong support at the lower edge of this teal channel. This channel is drawn around super cycle wave 5, and you can see it on the monthly chart in the historic analysis, and I link back to historic analysis at the beginning of every daily analysis and the beginning of every Lara's weekly analysis. This trend channel is drawn around super cycle 5 using Elliott's technique, the first technique for an impulse. It very nicely showed where cycle 4 ended. It's just got an overshoot, but it hasn't breached that channel. And so this trend line, while super cycle 5 continues, should remain, the lower edge should remain here providing support. So if primary 4 is deep, it shouldn't be that deep. It shouldn't move below this trend line. For now, within intermediate 5, no second wave correction may move beyond the start of its first wave below 2594.62. The daily chart will focus on the structure of intermediate 5 beginning here, this point down here. It's unfolding as an impulse. So far we have 1, expanded flat for 2, 3 is most likely incomplete, subdividing as an impulse, with an impulse for 1, a deep zigzag for 2, an impulse for 3, a running contracting triangle for 4 may be very nearly complete, and then we'll expect 5 to continue on upward. The target for minor 3 is the same. It expects it to exhibit the most common Fibonacci ratio to minor 1, that of 1.618 times the length of minor 1 at 2915. Now it's possible that this is correct as labelled here with minute 3 over here and minute 4, a running contracting triangle. It's also possible that minor 3 was over here. We could label this minute 1, 2, 3, 4, 5. Minor 3 could have been over here. We could be seeing minor wave 4 in its very early stages. To encompass that idea, I'm leaving the invalidation point down here at the high of minor wave 1. If this correction is minor wave 4, then it can't move into wave 1 price territory below 2742.10. But this has a better look because it has a better fit in terms of proportion and better alternation in terms of structure. There's a deep single zigzag for minute 2, and we may have a running, contracting or barrier triangle for minute wave 4. Within the triangle we have probably a double zigzag for A, a single zigzag for B, which moves beyond the start of A. So this is a running triangle. A zigzag now complete for C, a zigzag up almost complete for D. We may see just a tiny little bit of upward movement when markets open on Monday, and if this trend line is drawn correctly, the BD trend line may start from here and sit along the high of these two daily candlesticks, highs of these two daily candlesticks. If that's correct, the minuet wave D may end at this trend line as it's drawn here. And so this wave count would expect just a little pullback for minuet E to be very likely to fall reasonably short of the AC trend line, because that's the most common place for E waves of triangles to end, and when it's complete, if that happens, look out for a quick sharp upward movement. The movement out of Elliott wave triangles is always in the same direction as the angle of entry inward. They are always continuation patterns, and the movement out of Elliott wave triangles often begins quite quickly with sharp steep movement. At the hourly chart level, this is looking at the triangle in more detail. A double zigzag for A, a single zigzag for B, and C and D very close to complete, subdividing A, B, C, and C may be incomplete with 1, 2, 3, 4, and a little tiny fifth wave up needed to make just a slight new high. Here's the BD trend line. If it sits along these highs here, and this is where it sits, then this may be exactly where minuet D comes to end. It doesn't have to though. If we're looking at a barrier triangle, then D could end a little bit higher. As long as the BD trend line remains essentially flat, a triangle will remain valid. Remember, that's the only Elliott wave rule that isn't black and white. It involves an area of subjectivity. D can move slightly beyond the end of B. As long as the BD trend line looks essentially flat, then the triangle will be valid, and so this invalidation point is not black and white. When D's over, a final single zigzag down for minuet E would be most likely to fall well short of the AC trend line, and so minute 4 may end around about in this area here. This is very similar to that last wave count, but I have to consider if the triangle is invalidated, what else could be happening? We could be looking at a double combination for minute 4. Too many times over the years I've labelled a triangle either complete or very close to complete, only for it to be invalidated, and when that happens and the triangle is invalidated, it usually turns out to be a double combination. In my research so far, I've found that within double combinations by an extremely wide margin, the most common two structures are one zigzag and one flat. I have only actually found one combination so far, going back to the 70s for gold and now back to the 80s for the S&P, only one combination where we have a zigzag and a triangle. Minute wave 4 may be a double combination, and so let's expect the most common two structures, a zigzag and a flat. We may have a zigzag complete down here for minuet W, a 3 in the opposite direction, and now a flat correction for minuet Y, subdividing 3, 3, 5. Subminuet B has reached and passed the minimum requirement of 90% the length of subminuet A, and the most common range for subminuet B to end in would be from 1 to 1.68 times, 1 to 1.38 times the length of subminuet A, giving us a range from 2863.43 to 2879.98, and so a little bit of upward movement ending anywhere within this range would be very normal for this wave count. If we do get upward movement above this high here to a new high, then I'll be looking quite carefully at the strength or weakness of their upward movement. For this wave count, it really should exhibit weakness. It should exhibit weakness in volume and divergence between price and MACD or stochastics, and maybe even RSI. When subminuet B is complete, then we'd expect a 5-wave structure down for subminuet C to end beyond the end of subminuet A to avoid a truncation, and for minuet Y to end around about the same level as minuet wave W, so that the whole structure for minute wave 4 takes up time and moves price sideways. That's the purpose of combinations. Alternatively, it's all the same to this point here, and then minute wave 4 could have been a complete double zigzag at this low, and minute 5 in its entirety could be over. That means that minor wave 3 could have been over at this high here. I outlined this idea very briefly for you at the daily chart level. If minor 3 is over here, then minor 4 could be unfolding. It could be a zigzag subdividing 5, 3, 5. It could also, of course, be a triangle or a flat. We could label this a 3, 3, 5. And so I haven't given you an upper invalidation point because there's more than one way to label this most recent movement. This, I think, has the best fit with a 5, 3, and now a 5 down to unfold for this idea. Minute wave C would be extremely likely to move beyond the end of A, below this point here, to avoid a truncation, and minor 4 may end about the 0.382 Fibonacci ratio of minor 3, about 2792. If this wave count unfolds as expected, then the triangle would be invalidated, and then I would consider it could be minor wave 4 unfolding. If that happens, when we have a 5, 3, 5 zigzag complete lower, I would also have to consider another idea. I'd have to move the degree of labelling within that zigzag or down 1 degree and consider minor 4 continuing further as a flat triangle or combination. It'll be looked at in terms of proportion at the daily chart level with minor wave 2. One of the other reasons why for the idea of minor 4 unfolding, I'm labelling this as a zigzag, is minor wave 2 was an expanded flat, and so given the guideline of alternation, the most likely structure for minor 4, if that's what's unfolding, would be a zigzag. This wave count is the same as that last one up to this point here, and now I've moved the degree of labelling up here down 1 degree. It's possible that minor 3 isn't over, that minute wave 5 within it is extending, and we may have 1, a deep zigzag for 2, and 3 upward may now be unfolding. If we see new highs early next week and it comes with good strength, particularly from volume and on balance volume, then I will consider this could turn out to be the main wave count, but we really do need to see some reasonable strength and not any reasonable weakness in upward movement for this wave count to make sense. I want to consider all possibilities at this stage. Let's take a look at some classic analysis now, starting with the weekly candlestick as usual. Last weekly candlestick looked a bit bearish. It's now been followed by a downward week with a lower low and a lower high. That bearishness could be resolved, or we could yet still see more downward movement after the shooting star reversal pattern. But there's some bullishness now in this weekly candlestick. A very long lower wick relative to the real body is quite bullish, and it has some reasonable support from volume compared to the balance of volume last week being down and volume being lighter. So upward movement within this week, the balance of volume is up, does have support from volume, but in order to make a better judgment about that volume bar, we really need to look inside this week at the daily volume bars. We'll do that in a moment. On balance volume is around about even with its last all-time highs, so I'm not going to say this is a real new all-time high. It's pretty close though, so that's reasonably bullish. RSI is neutral. There's plenty of room for price to rise or fall. ADX showed us that the prior upward trend reached very extreme. This big triangle managed to resolve that, and it's brought ADX well down from extreme and RSI down from extremely overbought. There's room again for a new trend to develop. This is a lagging indicator, and so far we do actually have an upward trend, but with these multi-week pullbacks within it, ADX hasn't been able to catch up. From the low back in April here, the fact is we have still had a series of higher highs and higher lows. So that's the definition of an upward trend. And MACD at the weekly chart level still full bore bullish. At the daily chart level, here's our series of higher highs and higher lows. Support at 2800 has been tested now 3 times most recently, and it's still holding. Let's expect in the first instance it's very likely to continue to hold. We again have a full bore bullish look with all moving averages increasing. We're having a positive slope, and the short is above the mid, is above the long, and price is above all three. That's a full bore bullish look. The probability of good things going to happen is extremely high at this stage. The last 2 days we've got a little bit of upward movement and on declining volume. That's not too much of a concern, because in current market conditions for years now that's been the case. Price certainly could make another high on declining and light volume. It's been doing so for a long time, so I'm not going to give this too much weight, but it would support the idea that this is a corrective movement and we may be going to see a little pullback. That kind of supports the main Elliott wave count, expecting a little triangle to complete here early next week. These pullbacks have meant the ADX is fluctuating and the DX trend lines are whipsawing. At this stage it doesn't tell us that we have a clear trend at the daily chart time frame. ATR has been declining and is now flat again. This is normal, well, not normal, but this is current market conditions, and this has been the case for quite some time. So this is in current market conditions, not of a concern. And when we put this into the bigger picture, the problem with light and declining volume, you can see it also at the monthly chart level. That absolutely makes sense in terms of the bigger picture for Elliott wave. If we are coming toward the end of a cycle degree fifth wave, within a super cycle degree fifth wave, to end a grand super cycle degree first wave, in other words, we're limping along to the final conclusion of a multi-generational market with a huge trend change coming up, we should certainly start to see weakness in this market develop over many months, if not possibly even over a few years. And when we look at the monthly chart in terms of volume, that's exactly what we're seeing. On balance volume has now tested this line at least 5 times. It's holding. Expect it to most likely continue to hold. If we do see another pullback next week and on balance volume moves down to this line, expect that may very well serve to halt the fall in price. This line here, the support line for on balance volume, has now been tested multiple times. It's reasonably long held and it's almost horizontal, and so it has very good technical significance, which is why I say expect it likely to hold. RSI is neutral. There is plenty of room for price to rise or fall, as is stochastics, and MACD is bearish, but not full bore bearish because it's above the zero line. It has been fluctuating as price has been consolidating. Bollinger Bands are contracted and now holding steady. That's very typical behaviour of Bollinger Bands during a consolidation. Offers just a little bit of support to my idea for the Elliott wave count that there's been a triangle unfolding and is almost complete. What about inverted VIX in the AD line? Here's the all-time high for inverted VIX. There's some divergence from here to here with price. Price hasn't made new all-time highs, so we can't say that there's divergence here. But if price were to make new all-time highs next week, there probably would be some bearish divergence there. It's midterm though, and I would be expecting as primary 3 and then especially as primary 5 comes to an end to start to see this at higher time frames. For the short term, last week we saw a lower low and a lower high, overall downward movement, but inverted VIX increased. Downward movement within last week does not have support from increasing market volatility. Market volatility has declined, so this is bullish and supports the Elliott wave count. What about the short-term picture? We had some bearish divergence here, that's failed, and now we've got another high here from inverted VIX above this prior small swing high. Price has also made a new small swing high, so there's no new divergence. Upward movement for Friday session has support from a decline in market volatility. We don't have divergence here because price hasn't quite made a new high above here, so there's no new divergence at the daily chart level. The AD line has made another new all-time high at the weekly chart level. This is extremely bullish. Where it goes, expect price to follow. At the daily chart level also, another new all-time high. Now this doesn't actually preclude a small little pullback to start next week, as my Elliott wave triangle expects. but it does very strongly support the idea that we're probably going to see new highs next week, and I expect we may do so toward the middle and end of next week. That's all from me with your S&P analysis, and I hope that all of our members are having a most fabulous weekend.